Welcome back, baby dolls. You are a half dinner-sized plate serving of steamed broccoli. And what we are going through is my scheduled post from 1 year ago. It was the 20th of June, 2022. Lunar UST had collapsed, and the stock market boomers made all their videos to come out and try to step on the necks of crypto, especially Bitcoin. They only came for Bitcoin because that's really all they know. It's funny, they don't even consider all our altcoin Ponzi's to be a thing. That's how early we are. They only think about Bitcoin because that's all they know. Once they start understanding that our coins are going to have much higher leverage upside, then it's going to be too late. But for now, look at this. So I made this tweet from literally 1 year ago. It just came out. Today, Bitcoin was just $17,800 on the weekend. And Our Rich Journey had made a public prediction that it will undoubtedly die to $3,000 by June 2023. Wow! I recognize that date! That's exactly today's date, June 2023. Let's compare the 1 year S&P 500 performance to Bitcoin. You already know how this is going to turn out because you know I'm making a video about it. Let's go bang. Okay, let's go right here. Have a look at this. Excuse me. Okay, so instead of dropping 90%, we went up plus 46%. How about that? Isn't that crazy, friends? I'm also going to give you a cycle update. Do you see this? They made it. Look, I even see, friends, this is why you like, subscribe, press the belly button and all. Have a look at this, exactly where we are there. You can see that it was literally the bottom signal. It was literally the bottom. But, of course, we had the FTX capitulation. But you can just see from that moment, this is a 3-day chart. You can see from the background here, 3D is 3 days. So it takes a while to print these. So this is, look, you can make some like extremely nice swing trades. You could DCA harder if you take advantage of these over time. I want you to know that over the long run, it doesn't matter if you get in a DCA portion and then it goes down later. You have to think about yourself as your own journey. You want to buy in depression on average. You want to buy in anger on average. You can't get them right all the time. It just means you stretch it out 5 years, 10 years, 15 years, 20 years. If you're always looking for this, then you will be greatly better off compared to somebody who's buying with the euphoria when everybody's got their pants down and they're running around with glitter fairies on the streets. Those types of people, they keep buying based off how they feel. If you're buying and you're fading the crowd like this, understand it's scary, but on average, you do better. So don't forget, just because it went down, obviously, what was happening? I was getting a lot of abuse. It went down. They go, oh, we broke down. We're going on. It doesn't matter. It doesn't matter. You can't get it 100% right. If it was that easy, everybody would literally just sit there, wait for these signals, and then just go all in. But you can't. There is always potential danger around the corner, but danger won't stay there forever. So Bitcoin is up 46%. The S&P 500 is only up 17%. Now, I'm going to play devil's advocate again and let you know you can't really equate them. And actually, the S&P 500 has done fantastic because the S&P 500 is backed by the entire world economy. What I mean by that, if the S&P 500 tanks, they will literally print every single currency they can to prop up everything. They will have absolutely no regrets about it either. They'll just do it. They go, that's it. We're printing. We are stimulating without your consent. That's right. We're going there. And they will do that as well. They will debase the money. So longing the S&P 500 is a completely different risk profile than longing the Bitcoin. But it's a bear market for us. It's a vicious bear market. So we'll take the win. I mean, to be 46% up throughout this is pretty nice. So if you remember, they were talking about World War III, increased interest rates, and everybody said the next Great Depression was coming, and zoop, it was the same thing in the stock market. The exact same thing. It was funny, everybody believed bonds would come and be the savior, but actually, friends, bonds are still absolutely pooped because the rates stayed high. Because bond prices will go up when they cut the rates because there's a demand for the safety. So this is the funny part. That 60-40 portfolio has gotten absolutely kabooshed because everybody is stacked. The whole world is stacked onto one trade. The 60-40 portfolio, if you are new, welcome. Take a seat over there. Keep your back straight. 60-40 portfolio. 60% stonks, 40% bonds. The bonds part is meant to be safety. It's meant to be your guaranteed income coming in. But bonds got absolutely destroyed because of the high interest rates. We're going to see what happens after then on. But don't remember that. Don't forget that portfolio is a scam. Just because the whole world is in on it. Every single person in the world's been doing it for 40, 50 years. It's only going to end one way, and that's bad. They're going to have to print their money, and we already know this. That's why crypto was invented. That bond part of the portfolio, they are going to inflate the money supply. M2 is going to go up, and your holdings of the bonds are going to go down. They can't inflate your stock holdings. Well, they can. They can just press some digits. But they can't inflate your Bitcoin, your Ethereum. They can't inflate our crypto. There's so much juicy information here. We're also going to quickly go through what is going to be the psychology of stock market people coming in for the future. Because now that we've seen, so this is what, we have to think a step ahead, all right? We have to think a step ahead. This is how I'm thinking. We have now seen Bitcoin survive this. We've now seen Bitcoin smash it up. It has now earned a stripe. What I believe is, now that BlackRock is coming, I believe everybody will start to show this chart to stock market people. And this is the gold ETF chart. If we zoom in here, have a look at this. Of course, the gold. Okay, look what gold did. It went from here, gold ETF launches, and then it goes up only. And I'd like to remind you, this is from like 2005-ish, and it goes up to 2011. So it's like a 60-year rally. Gold goes from $350 up to $2K. So a 6x in 5-6 years. That's what is potentially on the minds of everybody out there. And that would probably be a nice big fat trap, because we want to think about the weak hands joining. Because I know gold's gone up and the ETF is also bullish, but let's have a look at this. I want you to know this, okay? We also have gone up. However, we got to think. We got to think about the future. This is Bitcoin. This is a Bitcoin monthly chart. It's Heikin-Ashi for nice and smooth green action. So let's have a look at this. There were weak hands that bought Bitcoin here. This was Da Vinci and Da Vinci J15 and Richard Hart, by the way. They bought the top here. You have weak hands that bought up here. You have weak hands that bought up here. And we know we had weak hands that bought up here. What's going to be the weak hands buying up here now? What's going to be going on in their minds? What are they going to be thinking about? We have to place an emphasis on the fact that the people buying here did not respond to Layer 1 NFT gaming microcellular laser eyes. They did not respond to that. Otherwise, they would already be in. They also didn't respond to the narrative of 2017 of the CME futures launch and Bitcoin store of value and John McAfee and eating his own genitals. Right? They did not respond to that. They didn't respond to the Ethereum ERC20 boom. They didn't even respond back here. Back when Cyprus, the banking crisis, they did not respond there. They obviously didn't respond in the super early days, back when Roger Ver and everybody else was in because they believe in liberty and freedom. So you can see, I've just gone back in time. All these narratives, they have not responded to them. They haven't responded to anything. They didn't care about store of value. They don't know anything. So what's going to help them get a stimulation response to the next Bitcoin wave up? Well, that's why I've just shown you this chart here is potentially saying that, hey, BlackRock, they got 10 trillion. They're offering it to their customers. Everybody's getting in. It's a new stable type of asset. Tokenization is the future. Once they start throwing in these words, now we have some sort of bullish catalyst for them. And it doesn't even really matter that we know the story or not. It's just we want to try and get ahead of the crowd. If we can grasp what they're going to be thinking about today, when that scenario does play out, we will be ready and we will have absolutely no issues with rotating out profit. So when we're looking at this chart and you're seeing all these, you got to remember that people are going to come in the top no matter what. And there's going to be something that convinces them to buy. And there has to be, because here's the thing. You're thinking, who the hell would buy Bitcoin at $80,000 to $90,000, $100,000? Now, of course, I can give you a long video about world bonds being 100 to 200 trillion. The stock market is 120 trillion. We have gold at 10 trillion. And Bitcoin and crypto altogether is only 1 trillion. We are tiny. And floating M2 money is like 40 trillion plus. So all of these, and then you have property that's 200 trillion as well. So you have all this money out there. Bitcoin is tiny by comparison. But here's the thing. We got to bring the big bucks in. We love big bucks here. We got to remember, retailers are the exit liquidity. We need retailers to get in. You might say as well, what about the liquidity of the retailers? They can't really push things up. Doesn't matter. This is the thing. Did you know funds, hedge funds, all these other people who wear suits, who think they're better than everyone, they are also retailers. They buy the tops too. Go back and listen to, actually you shouldn't do this, but listen to Peter Schiff podcast, because you'll spend 1,000 hours going through them. He has gone through so many times, I've listened to his wisdom. He's talked about so many times in history where he's seen the top of any market with the big funds buying in. So many tops. Big funds, pension funds, institutions, they'll buy the tops too. They'll cause the tops with retail. They are there. So just because they wear suits or they're a hedge fund doesn't mean they're always super smart. These people get trapped too. But what's going to entice them to get trapped? It might be a lot of humans, us humans. Please confirm our friendship and confirm if you are a human in the comment section. If a lot of humans are making noise and rallying around it, it will entice them to get in, because people will see a lot of noise and then they will gravitate around it. They'll start offering Bitcoin services. Every other institution and fund and broker will say, oh, we're going to offer the DCA for Bitcoin too. Now it becomes, from one point, it's turned into a trend. This is what we're looking for. We are looking for this. And of course, we're thinking about this gold ETF. When BlackRock starts this, it becomes in motion. Everyone's going to be looking at, when gold ETF, everybody's going to be doing this backwards comparison stuff. This is exactly what we want to see, because, hey, someone's got to buy the top. There's going to be some narrative up there. And, of course, you can take a myopic view and say, well, I'm really skeptical and I don't really like it. It doesn't really matter. I'll tell you one thing. The candle's going to go up anyway, and people are going to invent a narrative. Even if there is no narrative, I've seen this. If you're in markets long enough, you get to see this. You just see the market go up, there is no story, and people will make up a story. I've seen them just make absolute trash stories on the upside and the downside. And I've read them, I'm like, wow, they're really running out of material for this one. I can't recall specific ones now, but I've seen it time and time again. Every once in a while, they just have no idea. Why did the thing go up? It doesn't matter. Just someone market bought. Somebody is thinking about something in like 12 to 36 months from now. That's why they market bought. But you're trying to invent a story for the reason today. So these strong hands, they might be buying for 2027. They might be buying for 2027's money supply. But what's going to happen is in 2024, December 2025, people are going to be saying, oh, it went up today because of reason XYZ, because of BlackRock, because laser irons are back. That's not the real reason. The real reason is there is no reason. It's just it went up because it just went up. People just felt like it. That's why it always comes back down to the emotions. You're a baby doll, baby cake. This is what we're looking for. We had the absolute anger phase down here. This was anger phase. When we look at it down, I know it looks so small, so minimized. This is actually where the outreach journey, this is where the tweet was made. Well, for the tweet, and we got to measure it. And what I'm going to do is I'm just going to quickly show you. If you go back and you have a look at everything on a little bit of a smaller time frame down to the weekly, you can see that. Look, this is the tough part. When they came out, they weren't ultimate bottom signals, so you can't look at it in terms of, okay, now it's time to go all in for a short time frame. It's a longer time frame. I mean, look, it took another year. So this is also something to think about on the upside. So when you see top signals, right? When you see top signals, now the top was a scam. The top was an absolute scam. It did not behave like every other traditional way. There was obviously some deep insider scamming happening, but we've got to be prepared. When you start scaling out, you don't have a mindset of, I hope it crashes next week. You don't have that mindset. What you got to be doing is, if you get out, let's say you got out here, or even you got out here. Let's say you got out to the early one here. You got to be thinking, okay, where's the price going to be 12 months from now? March 2022. And look, it was lower when you're starting to get out. Of course, you're not going to get it exactly, but the motion is now in set. You see how this part, so imagine you sold up here. 1 year later, we're down here, and you're looking at, is it going to continue? Okay, now what I'm going to do is I'm just going to completely inverse it. So right now, I'm just going to put this rectangle where Outreach Journey made it. You see here, where they made their $3,000 Bitcoin prediction. So they said it was going down all the way down here. That's below 3,000. Okay, so they believed it was going there. So if you started buying here, or we just acknowledged it as a point in history, and then we walk forward 12 months, look at it. We are now hoping that this part is a continuation, just like how this part in the bear market was a continuation down. That's what we're hoping, what we're praying. Of course, I use words hope, speculate, because, of course, you are the master of your own domain here. It's up to you. If this goes to zero, you have no one to blame but yourself. No one. You take the risk. You earn the reward if it works out. And also, you got to take the punishment if it goes down, because we're all in this together. But hey, none of us ultimately have any grip on it because we don't have access to the ammo to buy this up. You are my baby doll, baby cake friend. You're a pumpkin pie. Tell mom and dad we're going to make it. And Bitcoin didn't go to $3,000. So one day we're going to party in the future. Like, subscribe, press the belly button, and all. Catch you in the next one.